Hello everyone, it's Wednesday, April 22, and today we will take a look at the charts for the euro and the British pound to identify potential market trajectories. Yesterday the euro dipped against the US dollar, reaching a new one-week low, but this does not indicate the beginning of a prolonged downtrend. In early trading, the euro was pressured by weak data on economic sentiment and current conditions from Germany and the euro area. These leading indicators for April decreased, which is not surprising given the ongoing energy crisis in Europe. Market attention then shifted to US retail sales figures, which showed a headline increase of 1.7% in March, exceeding the projected growth of 1.4%, thereby providing support for the greenback. Nonetheless, all eyes were on the statements from US and Iranian representatives regarding the ceasefire, which was extended today by President Donald Trump. He referred to this extension as strategic patience aimed at allowing Iran's fractured government time to formulate a unified proposal to end the conflict. In response, Iran asserted that the extension means nothing and indicated a need for a military response, stating that the losing side cannot dictate terms. Furthermore, the Iranian government characterized the ongoing US blockade of the Strait of Hormuz as an act of aggression, declaring that a ceasefire cannot occur until the blockade is lifted. Despite Iranians' response, market reacted positively to Trump's proposal to extend the ceasefire, with the euro, the British pound and both stock and cryptocurrency markets showing signs of recovery. In addition, Kevin Warsh, Trump's nominee to replace Jerome Powell as head of the Federal Reserve, addressed senators in the speech yesterday. He emphasized that he would not simply align with Trump's views, advocating for the use of interest rates as a primary tool. Warsh also stated that the Fed's balance sheet should be reduced, adding that the US economy has potential for upside. While his remarks were relatively neutral, he made it clear that he would resist any attempts by the US administration to interfere in monetary policy aiming to uphold the Fed's independence. Now let's take a look at today's macroeconomic calendar, which includes data on UK consumer prices for March. The inflation rate in the UK is projected to be 0.6% month-on-month and 3.3% year-on-year. Core consumer prices are expected to show a 3.2% annual increase. If the actual figures exceed these estimates, the British pound could extend its bullish run. Additionally, the calendar features statements from ECB officials including Frank Alderson and Philip Lane. Traders should also pay attention to Eurozone consumer confidence data for April. The index is anticipated to decline further from -16.3 to -18. Furthermore, Bundesbank President Joachim Nagel and ECB President Christine Lagarde are scheduled to speak today. On the US side, no major reports are set for release, so traders will likely maintain their focus on developments in the Middle East. While the market tends to react to mixed signals, it is clear that traders are pricing in a more peaceful outcome, fostering demand for risky assets. Turning to technical analysis, the 1-hour EUR USD chart indicates that a false breakout at 1762 would trigger a sell signal, potentially dragging the euro down to 1721. A break below this level would open the path to 1682 with the possibility of reaching 1651. At this level, I recommend considering long positions on a rebound targeting a move of 20-25 pips. Long entries at 1721 and 1682 could be considered on the false breakout. Conversely, if the price breaks and consolidates above 1762, the euro could recover to 1791 with potential gains extended to 1822. However, this scenario is likely dependent on reports indicating that the US and Iran are prepared to return to the negotiating table. Going short on a rebound would be appropriate at 1848, aiming for an intraday correction of 20-25 pips. Short entries at 1822 and 1791 could be considered following a false breakout. Turning to British pound, the trading setup is the same. The pound-dollar pair is currently positioned in the lower range of the broader sideways channel. A break below 35.29 would enable sellers to drive the price down to 35.03, potentially pushing it further to 34.76. If it falls below that level, sterling could face increased pressure, possibly targeting 34.46 and even 34.16. At these levels, it would be prudent to consider long positions on the rebound, aiming for a move of 25-30 pips. Long entries at 35.03 and 34.76 could be viable following a false breakout. If UK inflation figures come in far above analysts' forecast, the British currency might break above 35.29, climbing to 35.63 and potentially extending its upside momentum to 35.96. At this level, I would recommend considering short on a rebound, targeting a move of 20-30 pips. Short entries at 35.63 and 35.29 would be appropriate only after a false breakout. Best of luck to everyone!